Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 16th. We got another day of a lot of data to go over, so we'll just kind of jump right into it. Now, to start with, of course, it's Thursday, so we always get the weekly jobless claims on Thursday. So last week we had 239,000 people apply for unemployment. Forecast is supposed to be kind of within that range at 235, and it went up another 10,000 at 249,000. So each week, of the last 3 weeks, has gone up about 10,000 each week. Now, these are still low numbers, historical low, but again, it's going to be interesting to see if we see a trend of this going upwards, especially with the holiday season coming in. We get seasonal workers, so typically you'll see more employment at that time period taken up. So you usually see good job numbers picking up. And this year seems to be they're feeling pretty optimistic about where the holiday season will be this year compared to the last, decade, I guess, for that matter. We also got import price index. It's not really a kind of a low impact type of, but as you can see, back in September we had a 0.7%, and it went up only 0.2% in October. So it obviously improved a little bit in October. We also got Philly Fed November. So as you can see, this is a manufacturing index for the Philadelphia region. As we saw earlier in the week, we had a drop in the New York region, and as you can see in Philadelphia, we dropped again from 27.9 down to 22.7 from October to November. But however, if you look at industrial production for the month of October, September, it went from 0.4 percent increase was supposed to be forecast was at 0.6 and it went up 0.9. So good overall number for industrial for October in that area as well. Capacity utilization improved. We saw 76.4% in September. It's supposed to be in that range of 76.3, and it went upwards to 77%. So good numbers right there. And last but not least, we got the NAHB Home Builders Index. This is kind of the confidence level of home builders to see where they're going. And of course, that's one thing we're lacking is inventory. So we will obviously want to keep home builders happy, especially now that they're, instead of doing more multi-units, they're starting to do more single families and such. And as you can see, from October, we went from 68 up to 70 in November on their index. Currently, the market's up, so it's taking its data, it's looking at data, economic data, but it's also looking at earnings from Walmart and Cisco, both coming in really well, a little hot there. And then also they're talking, again, there's the tax plan's playing a part. Still looking at the tax plan as if it's going to happen or not. So they're hoping to see some progress, which sound like there might have been some progress in the House. I think they're doing a vote today on that. And again, we'll kind of see where things go. So if it's good news for the tax plan, you'll see stocks going up. And then, of course, interest rates will also go up as a result of the mortgage-backed securities going lower. We do got some Fed speak, which could also put some matters to rest. It depends what they say, and if there's something that catches the investors' ears, they're going to listen and potentially react in a positive or negative manner depending on what's been said. So that could create some volatility in the markets today as well. So let's take a look at the bond market. You can see the bond market. We had this really tight. We closed just above the 200-day moving average, but just under the 25-day moving average. And as you can see, it's a real tight range. So today we got pushed down below the 200-day moving average. This 200-day moving average is a tough beast to kind of crack here. And especially right now, you kind of got this triple layer on top of that to try to break above, and it's hard to do that. And you'll see here in a moment with the 10-year Treasury, it's hard for the Treasury to break below that. So we're just down below. We started much lower. Now we're down about 8 basis points from this position to right here. So we're down about 8 basis points. Not quite, depending on yesterday when the lenders did their pricing. Yesterday was kind of a weird day. As you can see here, the wide fluctuations. We had these really kind of peaks and valleys type of a day today where we're doing great, and then also we were doing way down, and then we closed basically okay, decent matter there. So that's where you get a lot of uncertainty of these as to which way to go. And of course, today it made the decision go lower, and we've gone up for the day, but we're still about 8 basis points. So we could have a slight improvement if they're pricing it down here. We could have about the same as if they're pricing right in here. In pricing today. So again, it's kind of a little difficult to say. Every investor or lender might be slightly different when they came out with their pricing, especially on East Coast and West Coast. All right, sorry for the confusion there, but if you went out from this spot to here, there wouldn't be much change in pricing today. Change interest rates would be about the same. All right, so hopefully that kind of clarifies matters for you guys in terms of pricing today. But here's the treasury we talked about, and here's the 200-day moving average, and it's a tough support for a tough floor here, giving support to the yield treasuries, which will keep the yields higher. If we can break it below it, then that means we can get some better, much better pricing in terms of interest rates. But if we can't break below this, rates are going to be pretty relatively close to where they are now, or perhaps even get worse. So again, but this is up about 2.35. We're down here about 2.32, and we're up about 2 or 3 basis points right now at 2.35. And as you can see, it did touch off the 25-day moving average earlier today. All right, folks, so that pretty much sums it up for the day. I hope you guys have a great rest of your day, but if you guys feel the need, you guys need some more data, just come over to Twitter. You'll find me at Mike Bjork on Twitter, and then get more data throughout the day, including the market close. Have a wonderful, enjoy your day, and thanks again for watching. I look forward to see you guys tomorrow. Bye.